Okay, everyone, thanks for waiting. My name is Madison Briggs, Senior Marketing Coordinator at CB Insights, and I'll be kicking everything off before turning it over to Oliver for the presentation and Q&A. Before we start, a few housekeeping items. All attendees will be muted during the event. There will be a live Q&A session after the presentation. We encourage you to submit questions via the Q&A tab in the Zoom toolbar. Don't worry about taking notes. We'll be sending the slides and the recording within 24 hours of the webinar. And finally, if you have any technical difficulties during the webinar, your best bet is to reach out to the Zoom Help Center. So a little bit about CB Insights. Our technology insights platform provides companies with comprehensive data, expert insights, and work management tools to help them drive growth and improve operations with emerging and established tech, overall helping our clients make smarter decisions for their tech strategy. If you're a client and have specific questions about what you see today, feel free to reach out to your dedicated customer success team. But if you're not a client yet and you're interested in doing a free trial of our platform, feel free to click on the link that I'm sending right now in the chat. So we have the Future of Fintech conference is back. This is a CB Insights conference, and it's in person with an online option. Going to be at the amazing Glass House in New York City from October 5th to 6th. And as always, we'll be bringing together the best and brightest founders of fintech companies together with the leading financial institutions. Speakers include Qualia, Betterment, Public.com, Ant Group, Stripe, and Revolut. We'll also be featuring 30+ tech demos from companies that will help modernize and transform your businesses that were meticulously selected by our CB Insights analysts as the ones that need to be part of your 2021 investment roadmap. We're offering a discounted virtual only option for those that are unable to attend in person, and you can save $50 with code webinar. So joining us today is Oliver Yu, an intelligence analyst at CB Insights who produces data-driven analysis and research reports on trends across the financial industry with a specific focus on banking and insurtech. Prior to joining CB Insights, Oliver worked at Bank of America, where he built analytics tools for corporate clients. Oliver graduated from Cornell University with a degree in applied economics and management. I'll hand it over to Oliver to begin the presentation.
All right, thank you for the introduction, Madison, and thanks everyone for joining this afternoon. To orient the audience, we'll be covering three main sections in this presentation, including global fintech funding trends, a geographic spotlight with a focus on LATAM, and finally, a thematic spotlight on the crypto ecosystem and open banking. As a refresher, the way that we define the scope of fintech here at CB Insights is based on the 8 verticals you see on the slide and mirrors the way our report is structured from a sector perspective. This report looks at VC-backed companies and equity financings only and excludes debt rounds. More on our methodology is in the appendix for those that are interested. Let's get to it. First, we'll take a look at this quarter's global funding trends. I don't know if you've heard, but fintech is on a tear. This quarter, global fintechs raised nearly $31 billion from investors, breaking the previous quarter's record by 30%. And that was already an 11-quarter record. To put in perspective, $30.8 billion, that works out to more than $1 billion in capital deployed a day, and represents a 192% increase from the same period last year. In contrast, deal activity in Q2, while it did grow, grew at a much less pronounced rate than funding, just 2% quarter over quarter and 29% year over year. But regardless, the cumulative effect over the past 2 quarters is stark. Funding in the first half of the year has already overtaken total dollars raised in all of 2020 by 24%, with deal activity also surpassing last year's midpoint. So what specifically has been driving the activity? One of the major factors is the number of mega rounds or $100 million deals. And this quarter, there were 88 of them, accounting for 70% of total dollars raised. Naturally, with a larger portion of outsized deals, we observed that the average deal size this quarter grew to nearly 47 million, a 30% increase from last quarter. And the majority of startups raising mega rounds were either mid or late stage companies. so Series B and on, as investors focus on fueling growth with companies that are showing product market fit. And so overall, we're not just seeing more deals, but we're seeing bigger checks accompanying them. Now taking a different look and just at the deal activity by deal stage, we're noticing an overall maturation in space as a larger share of deals are actually happening at the later stages, specifically Series B and on, as you can see in the chart. In fact, this quarter, mid and late stage deal share grew by 8% as more startups raised subsequent rounds of funding faster than early startups are getting their first checks. And as a result, early stage activity actually dropped to an 11-quarter low of 51%. So on the point of maturation, we're continuing to see a number of fintechs graduate to the public markets. Just to share, we saw Coinbase cross over to the public markets as the first crypto exchange in the mainstream. FX payments company Flywire and LATAM's dLocal, as well as Marqeta's modern card issuing platform and Wise, a cross-border payments company. And of course, Robinhood, although this was technically announced in Q3. But this is just a small sampling of the companies that we can probably expect to go public in the foreseeable future, so long as the markets stay favorable. So next, we're going to take a look at geographic trends. So of the 3 continents that saw deal growth this quarter, that includes North America, South America, and Australia, Asia, Europe, and Africa also declining quarter-over-quarter deal growth. I thought that South America's was one of the most interesting storylines. Though it is worth mentioning that North America has consistently grown deals quarter-over-quarter out of the pandemic. South America saw the starkest percentage growth. Compared to last quarter, South American deals grew by 52% as investors saw major opportunities in the region. It's not shown here, but even more impressively, South America's funding actually grew 153% quarter-over-quarter. Now, expanding slightly from the strict geographic lens to a broader view of LATAM, so South America and other countries in the region, a number of investors have been signaling the burgeoning opportunity in LATAM. And it's clear that it's going to become an increasingly important driver of growth in fintech. Specifically, since 2016, Latin American-based funding has grown at a 57% CAGR. In the first half of 2021, funding's already surpassed all of last year by nearly 52%. And specifically, on the right side of the chart, you can see that Brazil has been a major focal point for investors, accounting for 70% of the region's funding. Think of Nubank and Neon, both of which are fast-growing challenger banks in the space. And a distant second was Mexico, which accounted for 17% of the funding during this period. And third was Argentina and Uruguay tied with 4% of funding each. For clients who are interested in learning more about the challenger banking landscape in LATAM, definitely check out the link that we have here in the footnotes. And to zoom in a little bit and give you a little flavor of, a vertical view, specifically within payments, we can see there's been a lot of appetite from investors to fund companies focusing on areas like cross-border payments, payment processing, merchant acquiring, and e-commerce. The smallest deal at the top 5 was $86 million to Kushki. And if you take Clip, for example, a Mexico-based company that leverages smartphone plugins to accept payments, it's essentially a Square for Mexico. And so while a lot of these startups are working on similar issues that we've maybe seen before in other geographies, what's interesting is the localization of payment solutions tailored to specific geographic contexts, right? And coincidentally, Sequoia Capital recently put out a piece titled "The Latin American Startup Opportunity," chronicling the vast changes in the region within the last decade, which is worth a read. There's a lot of interesting stats there. But given the momentum in the region and on the topic of Sequoia Capital and smart money, let me take you through some of our actual things that you can do on our platform to track where the smart money is investing in the region. CB Insights, we've actually curated a list of our top fintech investors, which you can use to run searches on the platform. And our latest launch of home feeds actually lets you pin this information to your home screen so you're always caught up. So let me show you what I mean. So here we have our website. And so on the left side, you can specify all the parameters that you're interested in. So namely in the deal search, you can specify fintech as the collection against our smart money investor collection. Under company attributes, you can choose a location, so Latin America in this case. And financing and exits, you'll see an option for investors from collections. And so these are all the deals that smart money investors have participated in within Latin America. And as you can see, Brazil is fairly prominent in that list. There's 178 deals. And so what you can do is you can save this search. We'll call it Latin American Smart Money, Fintech Investors. Select home feeds and save it. And you can also save and view feeds actually directly. But if you click on the home feeds on the far left, you'll see that you have an exact deal search feed that allows you to keep on top of the deals that are happening in the space. Walla, for example, recently raised $350 million 6 days ago. Nubank also raised recently. And so this is a great way of keeping the information you want right at your fingertips. So now with that, we'll move on to, in this next section, we'll be going over a couple of thematic spotlights. So on crypto and open banking. So crypto, fringe to mainstream. Another major story this past quarter has been the flood of institutional activity as cryptocurrency crosses over from the fringe to mainstream. Just take a look at the news mentions in the last 5 years in this chart, and you can tell that it's just up and to the right. So these are tracking news mentions of crypto, digital assets, blockchain or Bitcoin, and capital markets. Notably, Morgan Stanley just co-invested in a company called Securitize that enables the securitization of digital assets on the blockchain. It happens to be their first investment in blockchain, which is an endorsement of the tech and just a good signal for the space. And broadly speaking, blockchain-based companies saw record levels of funding and deal activity. These companies target a range of applications, including enterprise blockchains, payment infrastructure, smart contracts, digital asset custody, and crypto exchanges. On the retail side of things, investor appetite for cryptocurrency has been very frenzied. According to Robinhood's Q2 financials, 60% of funded accounts traded crypto, and 62% of crypto revenue came from Dogecoin alone. And what I found was really stark was in Q2 it was the first quarter where a larger share of new customers placed their first trade in crypto rather than equities, right? Which is pretty astounding. And so all of this retail activity has translated into institutional appetite. Several of the top deals that you see on the right here this past quarter were to startups that are focused on specifically institutional offerings, including Paxos and Bitso. And as a number of banks, including like Goldman Sachs, BBVA, BNY Mellon, have announced plans to offer private banking clients access to crypto funds, we're realizing the importance of this uncharted territory that we're encroaching into of regulatory implications and KYC and AML infrastructure that are really needed to be on top of this evolving landscape. And so, some have estimated that over $15 billion worth of cryptocurrencies have been stolen from hacking incidents since 2011, which really highlights the need for security in this asset class. And within the last few weeks, we've seen hackers steal more than $600 million from Poly Network, a DeFi platform. And so, these are just a few instances, really high-profile instances where better security is clearly needed. And so just to name a few startups operating in the space that raised this past quarter are Chain Analysis and CipherTrace. They both leverage machine learning and data to help adapt to the changing landscape of AML and crypto crime, really helping law enforcement agencies track illicit crypto transactions and comply with anti-money laundering rules. And so we still see this as kind of an emerging space, and will continue to be a challenge and a hurdle for the asset class. And as a result, companies that are actually in this space are going to really see a lot of capital as this is one of the building blocks of the future of crypto. All right, and so with so much activity that's going on, I just wanted to show you kind of a quick pulse of what's been happening on our platform. Here are some of the biggest deals in the space from the past month as just a preview of what's to come. So if you go to advanced filters and scroll down on the left side, you can specify blockchain, last 30 days, and VC backed. And make sure you're in a deal search. You can actually identify there's been 71 deals worth $2.771 billion. And if I just sort by deal size, I can surface the most active or the largest deals that we've seen just in the last month. FTX, which is a crypto exchange geared towards institutional traders, and Fireblocks, which is a digital asset platform that enables institutions to store and transfer and issue digital assets. So, just in the last month alone, there's already been 6 mega deals, as you can see. And so the ecosystem around crypto is just getting started, and I found it really helpful to use our platform to track and keep tabs of all of it. All right, let's move on. So the next theme that we're going to be talking about is the gaining momentum for open banking, right? It's been developing for a while, but now we're really starting to see some traction. And increasingly, this movement is starting to expand into open finance, or what's known as the expansion from the scope of just bank data to other financial data like mortgages, credit, payroll, 401k, and insurance. So while we're still in our platform, just wanted to show you how I used our platform to uncover interesting insights from public company executives on some of the developing trends we're seeing in the private market. So in our platform, we have the ability to use what is the earnings call mention tool. And so as you can see here, I've specified open banking, data aggregators, and APIs in our image transcript. And you can see all the mentions in the past 5 years here, listed by company, Axos, Visa, MasterCard, and Banco Santander. And what's a really interesting feature is you can filter by top mentioned companies. So Visa, for example, has mentioned open banking quite a few times. And if you go to Q1 2021, there's an interesting excerpt from Al Kelly, which I'll read right here. So as you might recall, last year, Visa attempted to acquire Plaid, which ended up falling through due to regulatory scrutiny. But here's a really interesting quote that just kind of signaled where the company's headspace was in the aftermath. So we're continuing to forge down a path of making sure that we're a real player in the space of open banking. What Plaid was going to do was get us into specifically the data extraction type of business, which would have added to our network of networks. But it doesn't in and of itself prevent us from doing more going forward. In hindsight, this was awesome foreshadowing of what was to come. The biggest headline of this quarter regarding open banking was Visa's nearly $2 billion acquisition of open banking provider Tink. So what's interesting here is that one, Tink is a UK-based company playing in a market where open banking is mandated by regulations, particularly PSD2 and open banking, whereas Plaid is focused largely on market-driven spaces like the US. And so what's also worth noting is that the valuation here is less than half of what was offered at Plaid back in 2020. So it kind of begs the question, why is Visa so interested in acquiring a data aggregator? And Al Kelly mentions it, but he says it's really to complement this network of network strategy. And so through the acquisition, Visa is able to tap into Tink's sizable 3,400 bank integrations, which reaches millions of end users across Europe. And they also have about 10,000 developers using its platform to enable all these different use cases for customer permission data. And in addition to Tink, the deal with Tink, what we've also saw was Plaid raised again. They had a huge $425 million Series B. In the last couple of weeks, they raised another round. And then TrueLayer, another UK-based open banking provider, and a newcomer, Belvo, based in Mexico City, which raised a sizable Series A to pursue not just open banking, but open finance explicitly, which I thought was really interesting. And for clients that are looking to learn more about open banking, check out the brief in the link below. We have a bit of an open banking outlook. And let's, that kind of brings us to the conclusion. One, Fintech is on a tear and capital will continue to flow. We're reaching a new phase of innovation and collaboration between Fintech and traditional FIs. Secondly, Latin America will be a driver of Fintech growth. It's an area to watch that's ripe for disruption and innovation, and there's a ton of capital and interest going there. And then lastly is we're making headway in making crypto mainstream. The retail appetite is translating into institutional action, and AML and KYC infrastructure will be a key obstacle to solve for. And then lastly, Fintech will continue to play a key role in the open banking evolution. Tink's acquisition really just validates the importance of Fintech in supplying the connective tissue. And this is really making for a really interesting landscape for Fintech in the future. So with that's the conclusion of our presentation. We can move on to questions if there are any. Let me just open up. So just taking a look at the questions here. We have a few. So one question is that there's been a lot of buzz in the media around buy now, pay later. What do you see happening in the space? So yeah, that's definitely true. In Q2, just in this past quarter, we saw a lot of activity, right? Just Affirm having gone public a little earlier than that, and Klarna gaining a ton of new users, as well as probably most noteworthy is Square's acquisition of Afterpay. The idea of buy now, pay later is out of the bag, and I think it's gaining a lot of traction. Square's acquisition of Afterpay is really a validation of that. And so what we're seeing in the space is a lot of companies that are popping up as buy now, pay later for X, right? So Meru and Nello are both early stage companies that have popped up, focusing on wedding financing and as well as, installment payments for, streaming, ride hailing, and telephone usage. And so that's all interesting, but when you consider what's happening in the incumbent space, right, with PayPal's Pay in 4 and Visa just rolling out their buy now, pay later API, it's really going to be interesting to see how the standalone players like Affirm and Klarna are going to fare. There's this big debate going on whether or not it's a feature or if buy now, pay later can kind of be its own business. And so, more to come there, but I definitely expect there to be some consolidation if there already has been. And so, we'll have to see, but I think it's an exciting time. Let's see, what are the questions? So one of the questions that's pretty interesting is, embedded finance has been a big topic of conversation. And where do we see it go? So embedded finance is an interesting one. Just kind of as a refresher, it's really the idea that the company's enabling non-bank companies to offer financial services. So bank accounts, wallets, payments, and lending. And it's generally a monetization play and helps to kind of drive increase long-term value, customer long-term value. And I think as a practice, it makes a lot of sense for today's world. Consumers kind of expect to have this unified experience, and brands want to deliver those customer journeys. And there's a huge value of offering financial services. Take, for example, what's happening, in banking. There's been a lot of appetite to open up financial data and give consumers more control over their information. And really what this will allow is just more use cases that are more innovative, that are more convenient for customers. And so we've seen a number of companies pop up, from Unit, Bond, Treasury Prime, just to name a couple. And so it's definitely something that we see a lot of value in and kind of a long-term future for. But what's also interesting that we covered in this past quarter's report is the emergence of embedded insurance. Right? And so it's kind of this natural extension of this development where non-insurance companies are also able to offer insurance policies. So a company called Extend offers merchants the capability to add warranty coverage to their e-commerce products, which in turn helps them capture more incremental revenue, but it also helps the insurance companies get access to distribution and additional customers that they may not have otherwise had access to. And then also there's companies called Cover and Boost Insurance that are also in that space as well. I think we have space for one more question. Yeah, so there was a question around if there were any significant changes in the most active fintech VCs. Have any become more significantly more or less active in their fintech investments over the past year or so? So compared to last quarter, the top 6 or so investors were pretty consistent. Sequoia topped the charts. Ribbit Capital was up there as well. And it was towards the bottom 10 that there was a little bit of shuffling. I believe GFC caught up with QED, and also Bain Capital Ventures cracked the top 10. And so I think the focus on fintech, if you were already focused on fintech, you continue to be focused on fintech. And if you weren't as focused on fintech, you started to pay attention a little bit more. And so there was some shuffling, but nothing too drastic. Yeah, and there's, I guess, one last question is if there's any update on the progress or traction of niche digital banks, so for specific demographics and such. And I think this past quarter, we saw a huge funding environment for teen-focused banking and family-focused banking, so STEP, Current, and Greenlight. And so we actually also saw that Apple launched a family card option. And so it's really targeting different use cases and trying to grow with a specific segment, right? So maybe, teens don't have as many funds today, but they're banking on educating them so they're more financially savvy moving forward, but then also building loyalty in that way. And so, yeah, I think there's definitely a lot of exciting stuff going on in digital banking. And I think that's all the time that we have for questions. Yeah, thank you all for joining. I'm going to pass it back to Madison now for closing remarks, but thank you.
Thanks so much, Oliver, and thank you to our audience for joining and for all the questions. Thank you for submitting so many. We will try and get most of those answered for you offline. And just a quick reminder that the slides and the recordings will be sent out within 24 hours of this webinar. And if you do would like to sign up for a free trial of our platform, I'm sending the link again in the chat that Oliver showed. Apart from that, I think that's everything. So thank you so much and have a great day.